Bubble Watch digs into trends that may indicate economic and/or housing market troubles ahead. Buzz. Commercial properties pandemic-era rebound looks relatively complete by one yardstick. Source. The Green Street Commercial Property Price Index, which tracks the performance of big real estate investments. It wasn't too long ago that things looked bleak for many landlords, both those who serve corporations and those who house consumers. The pandemic's economic chill made it tough for many businesses and millions of tenants to write a rent check. Well, things have changed for the overall industry as the economy, and our collective health, recovers. A price rally in July pushed Green Street's all-property index up to 4%. That upswing moved this benchmark to its first record high of the pandemic era at 1% above its pre-coronavirus level of February 2020. Yes, it's an eye-catching rebound from a nasty 11% fall between February and July 2020 as the pandemic iced the economy. However, this is in no way a universal recovery for trusts that own and operate large properties. Of 11 real estate sectors tracked by Green Street in its monthly pricing report, 6 in July were above pre-pandemic values, 1 is even and 4 are still below February 2020 pricing. Quiz. How much is the stock market's Standard & Poor's 500 index up in the same period? Answer below. Last summer, a commercial real estate industry collapse was feared. This year, we wonder if some of the rebound seems too good to be true. The storylines behind commercial properties' mixed performance mirror the uneven rebound of the broader economy. Note that ultra-low interest rates motivating house hunters to buy are also jazzing big money investors to do the same with commercial properties. Let's look at price swings in the commercial real estate niche over 17 months, starting with the winners. Manufactured home parks shook off a 4% early loss and were 25% above pre-pandemic levels in July. Homeownership became surprisingly hot, and this is perhaps the most affordable option. That also rewarded the landlords who own the land underneath mobile homes. Self-storage, a 5% dip early on reversed into a 24% gain in the pandemic era. These facilities do well in times of economic uncertainty as folks lose homes or are forced to double up and need a place to stow belongings. Industrial, a 5% decline leaped to a 21% coronavirus gain as online shopping ballooned and the need for warehouse space exploded. Net lease. These properties tend to be standalone retail properties such as drive-through restaurants and drugstores, merchants that fared very well in the keep your distance pandemic. Values suffered an early 8% drop but are up 15% through July. Student housing, for-profit dorms have seen a sharp turnabout, from an early 14% plummet to a 9% gain in the pandemic era. Worries about this segment disappeared as many dorms remained rented and fears faded of extended remote learning and more lost revenue.